Good morning and welcome to the AUD Securities Markets Update. The first day of the week came in with few economic releases and events, while the volatility remains on the rise ahead of the busy week ahead with full of economic releases and events from the UK, the Eurozone, Asia and even from the US. But beginning with the first Asian session the Asian session today, there were few economic releases from New Zealand and Australia, which had a notable impact on both the Aussie and the Kiwi. But beginning with New Zealand, the business conditions or the business confidence index came in slightly less than expected. We're easing back toward 23 in the first quarter of this year comparing to 24 in the last quarter or the final quarter or Q4 of last year, and this is also the lowest reading since the third quarter of last year. Moreover, the house price index also in New Zealand again increased by the most on a record, rising by 6.7% in March comparing to a rise of 0.8% in February. Moreover, the rate of change posted the biggest increase since July of 2013. Moreover, in Australia, the NAB business confidence index also improved toward 3 points in March, up from a 0 in February, which is also the highest reading since January. And the business conditions index also improved toward a 6, up from a 2 during the same period, which is again the highest reading since November of last year. And this is also the first improvement after 4 months of consecutive declines. Furthermore, as a result of these figures, of these data, the Aussie and the Kiwi advanced across the board during the session, and the Aussie spiked up towards 76.20 or 76.20, up from 75.80s, while the Kiwi also advanced during the first hours of the sessions toward or to as high as 74.85, up from 74.50. However, it came back down in the early morning hours. However, the Aussie dollar, and as we mentioned a few weeks ago, the Aussie reached our selling area noted in our previous report last week. The selling area basically it was between 77.30 and the 77.80, which represents its 50 and the 61% Fibonacci retracement, and the pair also advanced to as high as 77.40 before declining to as low as or toward 75.50s in the past few days. In the meantime, the stops for such trade can be moved to the entry level, while the current upside retracement is likely to be limited between 76.46 and the 76.68. On the downside view, the pair may extend its decline in the next few weeks toward this month's lows around 75.30 in the next few days. As for the European session ahead, there are also many economic figures or many economic releases from the UK and the Eurozone, which likely also to have a major impact on the market. But the main focus today will be on the British data. The eyes will be again on the inflation figures today, which may show the first deflation signal in the UK. First of all, the year-over-year CPI is likely to remain at 0 in March, while the month-over-month CPI is expected to rise again by 0.2% in March compared to another rise of 0.3% in February, which would be also the second monthly increase in a row not seen since the beginning of last year or since the beginning of 2014. The year-over-year core CPI is expected also again to remain stable at 1.2% unchanged with no change, which remains also the lowest reading since December of 2018. Moreover, the PPI input in the UK, which is more important also today, the input may decline again by 0.5% after rising by 0.2%, while the year-over-year PPI also may decline further or may slow down further toward minus 13.5% in March. Finally, the year-over-year house price index in the UK also is expected to advance again toward 8.7 in February compared to 8.4% in January, which would be the first monthly increase after 4 months of consecutive declines. Finally, in the Eurozone today, we have the industrial production figures is expected to rise by 0.3% after declining by 0.1% in January, which would be also the first or the biggest monthly increase since December of last year. Going forward to the US session today, there are many economic figures and releases also today will be released during the day, which is likely to have the major or the biggest impact on the market. But first of all, the retail sales estimates are quite positive for last month. The advanced retail sales is expected to rise sharply by 1.1% in March after declining by 0.6% in February. But moreover and more importantly, this would be the first monthly increase after 3 months of consecutive declines, which is basically since December until February, which was also the worst decline since 2008 or since the financial crisis. Therefore, any negative surprise today would increase the speculations for the pose by the Federal Reserve in the next couple of meetings, and may push the first rate hike speculation or estimates toward September instead of next June. The core retail sales also is expected to rise which is set to post the first monthly increase by 0.7% after declining by 0.1%, which would be again the first monthly increase after 3 months of consecutive declines. The PPI data also will be under the spotlight today as well, in addition, because it's related to the inflation data. The month-over-month PPI is expected to rise again by 0.3% in March compared to a decline of 0.5%, which would be also the first monthly increase after 4 months of consecutive decline. The year-over-year PPI is expected also, unfortunately, to slow down further towards 0.9%, down from 1%, which would be also another record low. The core PPI may rise also by 0.2% compared to a decline of 0.5%, which would be also again the first increase after 2 months of consecutive declines. Finally, the year-over-year PPI may also slow down again towards 0.9%, down from 1%, which would be also the lowest reading since May of 2013. Finally, the business inventories in the US may rise by 0.2% in February after 2 months of consecutive declines, which would be also again the first and the biggest monthly decline since November of last year. Quick update on the DAX30 index. Last week we noted that DAX30 index is likely to follow the Dow Jones Euro Stocks index to a new record high. Indeed, the index continued to advance in the past few days, and especially on Friday to a new record high of 12,401. However, a short-term retracement could be in place right now. The index remain at the same levels. However, a short-term retracement could be seen or could be in place, but at the same time, the key levels for today or for this week stands at 12,216 in addition to 12,174. As far as these two levels, or as far as those levels continue to hold, another rally could be seen in the next few weeks. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.